Welcome to Merullah Jamali Capital Market Insights. Financial freedom is a goal many of us strive for, but achieving it requires discipline and a solid plan. Today, we'll discuss how to save effectively and where to invest those savings to secure your financial future. The journey begins with understanding your expenses and making conscious decisions about your spending. First, let's divide your expenses into three categories: essential needs, adjustable expenses, and luxury or entertainment costs. This categorization helps you identify areas where you can save more effectively. Category 1: Essential needs. These are your non-negotiable expenses like rent, utilities, groceries, and other necessary bills. These must be covered no matter what. It's important to ensure that your basic needs are met without compromise. Category 2: Adjustable expenses. These are costs you can tweak to save money, such as dining out, coffee runs, cigarettes, and social outings. By making small adjustments here, you can save a significant amount. For example, reducing the frequency of dining out or switching to a cheaper brand of coffee can add up over time. Category 3: Luxury or entertainment. This is where you can make the most savings. Do you really need the latest brand name phone, or can you make do with a less expensive model? Cutting down on luxury items can substantially boost your savings. Consider how often you purchase new clothes or the amount you spend on entertainment and look for ways to reduce these costs. Discuss your plan with your family. Their support and understanding will be crucial in making necessary adjustments and achieving your savings goals. By involving everyone in the process, you can ensure that everyone is on the same page and working towards the same financial goals. Once you've saved money, it's time to invest it wisely. A well-thought-out investment strategy can turn your savings into a substantial nest egg. We'll break down your investment strategy into 3 stages over a few years. In the first year, focus on stability. Invest in stable, dividend-paying stocks and mutual funds that offer quarterly payouts. This will provide a steady income stream and reduce risk. Look for companies with a strong track record of paying dividends consistently. Mutual funds can offer diversification, which helps mitigate risk. In the next 2 years, channel your savings into growth stocks. These are companies with the potential for significant appreciation. While they carry more risk, they also offer higher returns. Research companies with strong growth potential, innovative products, or services that are likely to see increased demand in the future. After building a foundation, diversify your investments. Spread your savings across different asset classes such as real estate, stocks, and ETFs. Diversification reduces risk and increases the potential for higher returns. Real estate can provide rental income and long-term appreciation, while ETFs offer a simple way to invest in a broad range of assets. Regularly review and adjust your investments. Staying informed and being proactive will ensure your portfolio remains aligned with your financial goals. It's important to stay updated on market trends and economic conditions that may affect your investments. Don't be afraid to make changes if necessary to stay on track. By following this disciplined approach to saving and investing, you can achieve financial freedom. Remember, the journey requires patience, consistency, and the willingness to make sacrifices today for a better tomorrow. The ultimate reward is the peace of mind and security that comes with financial independence. Start today and take control of your financial future. Financial freedom is within your reach. Begin by categorizing your expenses, making necessary adjustments, saving diligently, and investing wisely. The road may seem long, but with perseverance and dedication, you can achieve your financial goals. Thank you for watching. Subscribe to our channel for more financial tips and strategies. Together, we can navigate the path to financial freedom.